So we got 3 clues. And those 3 clues today on crude, they were, what were they again? They were inside day. We were right inside, right there, inside the range from Thursday, above the previous lows, below the previous highs, and we are inside the range. Now, this is a transitional area because we can easily drop right down and all of a sudden be an outside day. An inside day says buy the lows, buy the previous lows. An inside day also says, though, if we go below those previous lows, I'm selling retracements on the way down. The second clue we got was the price wedge. And the price wedge, pretty easy to see here. Again, we marked it up with these big, bold trend lines. There's my big, bold price wedge. All right? And the third clue, we got that flat trigger line right in the middle. Triple top, double bottom. That's a sideways range. So we know exactly what we're looking at here this morning. And now that we know what we're looking at, now I can use these price structures to anticipate what the personality will be, and then I can plan my attack from here. Now, I want to remind you guys, we go over all of this every morning at 7:30 a.m. If you want to learn this stuff in real time with me, come out and join me on Monday morning. We've also got a special training for members on Monday morning, so don't be afraid to ask about that information. Our sales and support team can help you guys out. So what happened today? Well, we began inside, but that didn't happen. That didn't last very long, did it? What happened this morning? We quickly began to drop. And when we dropped below, we knew we had a trend line right here. Trend line there, trend line right here. And so we knew that right here, this was going to be a tough spot. We knew this might be a chance to sell a retracement. Outside day, sellers in control, sell retracements. But we also knew, what does that wedge tell me? The wedge tells me, hey, don't be surprised if this thing goes yoink right back up into that range. A wedge says fade the breakouts. So we knew this morning when we broke below that previous low of day, the sellers were in charge. But we also knew the price wedge said, be weary of those shorts. Because with the wedge pattern, how many times have we seen the wedge come down and fail and then right back up, and we make a killing by buying that failure? And one of the voting members of the Fed this morning comes out and says, hey, we got plenty more bullets in this gun. We will not hesitate to keep providing what we assume he means by bullets is stimulus. And so the first thing we say is wait a second, is he talking about more stimulus right now? And you know what that means for crude, more stimulus. Now this would be the exact opposite for, well, not the opposite for gold, have the same result as gold, but for the different reasons. On the crude oil, when they start talking about the word bullets, right, and we know that means stimulus, okay, that means they're looking at more injections of capital, right? 5 of the printing presses are going to print more money here. Now for gold, that would mean inflationary concerns, so gold will jump. On crude though, why would crude jump? Because what's good for the recovery is good for demand, and what's good for demand means higher prices. So the news was quickly overshadowed by the, right, I believe it was Bullard this morning, the Fed speaker, who said, we got plenty more bullets for that gun, and of course crude says, jackpot. So we see right away here, crude goes right towards, right, the high, the lows of that wedge, and the previous low of day. Now we talked about this earlier this morning. What is one of the highest percentage trades we get? The transition. If we break below the previous lows, that's a transition to the sell side. Sell, 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 high percentage trades. But that is quickly overshadowed by the even higher percentage trade if this thing fails and goes right back up. If we see those sellers exhausted and come right back up, guys, it's one of the strongest clues we get. That basically tells me that they couldn't find any sellers down here. They couldn't find any sellers to see more value below 80. And that's a big number for us because above 80, we can see 90. Below 80, we can see 75. And that's that break-even point for OPEC. All right. So we know now we don't go below 80. The Fed speaker, Bullard, that really made it almost too easy here because now we knew if he's talking about bullets in the gun, he's talking about stimulus. So we know it goes right back above that previous low of day. No pattern here. This is what you call a tape reading entry. On your fast time frame, it's a breaker pattern long. On this time frame, can't see it here. This is what you call a more advanced entry, right? You're listening to the news coming out. You know from experience how that news will affect these markets. We trade crude the same way every day. Our consistency allows us to anticipate these things. We go above the previous lows, buyers everywhere, lots of speed. Very easy now to understand why price blew through that previous low. So buyers push above the previous low, a very bullish move, and of course, we grab 43 ticks out of it. So no immediate pattern on my 13 range chart. Go to your 4 range chart, and this becomes a breaker pattern long. All right, guys? And again, you've got that free license here. Once you break above that previous low of day with this type of situation, again, the first time we went back above that previous low is always going to be the highest percentage. It's electric. Those buyers are going to come in, stops are being run, okay, and everything jumps. So we make 43 ticks here. And we said, whoo, now we've got ourselves a day going on here. We made 10 ticks, gave it back. 39 ticks, now 43 ticks. I will take that every day of the week. And this now we know is just getting the party started. Whenever we go above that previous low, back below the previous low, we're going to see some patterns here. I'm always excited for markets that move around those previous highs and previous lows. Now, this is going to be a wave pattern. Okay, here's your wave pattern. A 21 range wave. It's right here. 21 range wave pattern right there. Up top here, you can see it right here, right? We go up, we pull back, and we go. And of course, at 10:15, we are above the previous low of day. The buyers are in charge.